There's one word I really hate, and I'm willing to bet that you hate it too. It's called taxes. Paying taxes is inevitable, and there's simply no way to get rid of taxes completely. But we can use all the available tools and methods to legally reduce our tax obligation. We all know that feeling of being taxed before you receive your salary, being taxed when you retire, being taxed when you buy something at a shop, when you refill with fuel. We get taxed in almost every portion of our lives. Unfortunately, it's part of life, and there's no way that we can completely avoid taxes, but we can figure out how the tax system works and use it to our own advantage. Just imagine receiving 100 Rand in profit, and 45% of that profit needs to go to SARS, although you were the one that did the work to receive the 100 Rand. That leaves a bitter taste in my mouth every time I think of it, so I want to make sure I have the knowledge and I have the necessary skills to reduce my taxes overall. The reason I like investing in property is because it's a great tool or asset class to use to reduce your taxes. I wanted to show you guys some monthly tax deductions and other tax deductions that you can use to reduce your overall tax obligation. Sometimes it feels like people invest in property and they are not aware of all the deductions you can use to reduce your taxes. Before we jump into the nitty-gritty stuff, I am not an accountant. I'm definitely not smart enough to be an accountant, so I outsource that to someone that has the right knowledge and that can help explain this stuff to me in a simplified way. I would rather pay a professional that has the experience and the qualifications to help me with stuff that I don't understand. This is something that I want to add in the beginning of the video, because although I share this information with you, this is not stuff that I do on my own. It's really important to have a good accountant on your team, and I would actually say it's the most important team member that you should have. We should run our property portfolios like a business and manage it like a business. That's one of the main reasons I use an accountant. You've probably heard me speaking about Prosperity Enterprises, and they are the accounting firm that I use to manage my property portfolio. The reason I recommend them to everyone I speak to is because they are property investors themselves. This is by no means a sponsorship. I just truly believe that they are great in what they do. So if you need an accounting team, I'll share the link down in the description, so feel free to reach out, and you can even use my name as a reference. With that said, if you are not sure about all the expenses you can deduct from your income in your property portfolio, here's a quick list of the monthly expenses. The first one on the list is rates and taxes. This is taxes that we pay our local municipality, and this is applicable on each and every property in South Africa. So this is something that we can't avoid paying, but at least we can use it to reduce our overall tax burden. Another one is levies. If you own a property in a sectional title scheme, levies is the amount that needs to be paid to your body corporate to manage your property and keep it in good condition. This is a fee that you need to pay on a monthly basis, but again, at least we can use it to reduce our taxes. Then another great one is rental agent fees, and this is a fee that you pay a rental agent to either place a tenant or to manage a tenant in your property. This is a fee of usually around 6 to 10% of your rental income. So let's say your rental income is 7,000 Rand, your commission is 10%, which means 700 Rand goes directly to your agent to manage your property. This is a fee that we can also include in our tax deductions. Of course, we can also include accounting fees. Obviously, they are going to charge us a fee to set up our portfolios, to manage our portfolios, and to submit our taxes, including stuff like financial statements. That fee that you pay your accountant can also be used to reduce your taxes. Some of the other important costs that you can use to reduce your taxes is bond interest. You pay a crap load of interest to the bank if you use a bond to buy a property. So the great thing is that interest portion can actually be used to reduce your taxes as well. The reason I love investing in property is because of this. We can use leverage leverage to buy an asset that will appreciate over time. We place a tenant that will hopefully cover all of our expenses, and we will have money left over at the end of the month, and we can use the interest to reduce our overall taxes. So interest is a big portion of our tax deductions. Just remember, you can't deduct the principal amount, only the interest portion. Then we have stuff like advertising cost, and this is applicable if you have a new property on the market that you need to advertise either on Property24 or even listings like Booking.com or Airbnb. If you pay money to advertise your property for it to be rented, those are fees that you can use to reduce your taxes as well. Then we get stuff like insurance. The tax deductions will be applicable for insurance of the outside part of the building or the brick and mortar part, and not inside insurance, meaning like furniture insurance, TV and all those type of things. It's based on the building itself. So if you pay insurance for a freehold property, that portion can be used to reduce your taxes as well. Then of course we have stuff like gardening services and security. If you have a gardener to keep your property in a good condition, you need to pay them, and that fee can be used to reduce your taxes as well. And of course, security. If you have VR security or ADT or whatever, you pay them a monthly fee that you can use to reduce your taxes as well. These are all small tax deductions, but it makes a big difference at the end of the day. Then we get to an interesting one, which is wear and tear. We can also call it depreciation. It simply means that you can depreciate the value of an asset over time while it's actually going up in value. And that's why property is such a powerful asset to invest in. This is also something that you can use with furniture and fittings. So if you have a student accommodation property or an Airbnb and you have TVs and furniture and fridges, those things will obviously depreciate because of wear and tear, and that can be used to reduce your taxes. Probably one of the biggest ones you can use is repairs and maintenance. Repairs and maintenance is simply bringing something back to its original condition. Let's say if a geyser pressure valve broke and you need to replace that, that will be a repair. If you redo your kitchen or redo your bathroom, that is an improvement. So there's a fine line between the two. There's also many other smart ways that you can use to reduce your tax burden if you use your property portfolio as a business. If you use different entities to run your portfolio, there's many different ways that you can move profit around from one entity to another entity without paying taxes legally. Some examples might be donations or even loans. If you provide your trust or company with a loan from your personal name, that loan needs to be repaid to your personal name with interest. Of course, a loan cannot be taxed, so it means if your trust creates a certain amount of profit within a year, after all of your monthly expenses is deducted, you need to pay back the person that borrowed you the money. Because it's a loan repayment, you won't be taxed on that amount. But like I said, again, this is where you need a good accountant. So don't try to do everything on your own. Don't try to be a tax professional if you have zero to no experience. Instead, consult with a professional, because the amount of fees you need to pay them is absolutely worth the money. At the end of the day, it all comes down to managing your property portfolio like a business, and just make sure that you keep proof of all your debit orders, all your bills, and all of your slips. So one day if SARS comes knocking, you have the proof of all the expenses.